And if I asked you, what are the two most important days in your life? And this was a question which was asked by a leading philosopher in a large audience. And he got lots of answers. So most of them said that the day I was born was the most important, which it is. And the second most important day in one's life, there were different answers. The day I got married, the day I got my first job, the day I became a father, the day I started earning income. But I think there is one more important reason why the second most important day in your job, in your life, is beyond what I mentioned just now. And I think that's what the purpose is about. The second most important day in your life is the day when you realize why you were born.
In our last video, we talked about fund manager Saurav Mukherjee's rules for selecting the best companies and also how Asian Paints became number one. A common thing happens in Indian culture is that your mother will be always on your back to do hair massage, holding parachute. I know that instead of thinking about flying air, you thought about hair oil. Same here. In this video, we are going to talk about the journey of Marico, a FMCG company which replaced the term parachute as coconut oil instead of flying air. So let's hear the story. Welcome to the Unusual Billionaires video part 2. Marico is named after its founder Harsh Mariwala, whose grandfather Vallabh Das Vasanji came to be known as Mariwala because of selling pepper. Vasanji had 4 sons, who started Bombay Oil Industries Limited in 1948 and quickly graduated from trading spices to manufacturing coconut oil, vegetable oil and chemicals in Mumbai and spice extracts in Kerala. At just age of 20, Vasanji's elder grandson Harsh Mariwala joined BOIL in 1971. A graduate from South Mumbai's prestigious Sydenham College, Harsh Mariwala found his calling in the consumer products division, which included coconut oil and edible oil. Mariwala wanted higher margin, so he switched from business to business to consumer. He started with small steps such as switching packaging from bulky tin cans of 15 liters to small packs of 100 milliliters and named it Parachute. Through the 1970s, Mariwala used professionals to build the distribution and branding for his products Parachute and Saffola. India's diversity is well known and creates challenges in the marketing. For example, Parachute was used as edible oil in the south and as a hair oil in the west. Thus, Parachute's brand identity was built on universally appealing sentiments such as purity, clarity, aroma and tradition. Parachute moved from tin containers to selling hair oils in the plastic bottles, a friendly consumer approach since plastic bottle was lighter and aesthetically better looking than tin containers. All these factors contributed in making Parachute coconut oil a market leader in the north, south and west. In these regions, Parachute had a market share of 50% in 1991. Harsh Mariwala realized that there was no synergy between his B2C and other BOIL business, which were pure B2B. As his cousins took control of the other business, he suggested separation of the family business, thus giving each business unit complete autonomy. Accordingly, in 1990s, the BOIL board decided to break the business into 5 separate businesses, all of which are wholly or partially owned subsidiary of BOIL. The separation of the business allowed Mariwala complete autonomy to build a sustainable, profitable business. With lot of professionals and increasing his stake in the company, Parachute acquired 55% of the market in 1996. The war between Marico and HUL. By the time 1997, Marico's success in Parachute had put the firm on the radar of consumer giant Hindustan Unilever Limited. HUL owned Nihar, which had 17% market share in coconut hair oil and competed with Parachute. K.K. Dadi says, the then chairman of HUL called Mariwala in the late 1990s to buy out Marico, saying, Mr. Mariwala, I will give you enough resource to take care of you and all your future generations. Mariwala with respect rejected the offer. Thus began an epic brand war which could come to define Mariwala and Marico. It was a worrying situation for Marico. HUL started with aggressive advertising and sales promotions for Nihar and Coco Care. Parachute responded by increasing distribution and improving the packaging and product quality to avoid any losses of market share. In 1997, Marico also acquired Oil of Malabar and relaunched it with a lower price tag to compete with HUL. In the war with HUL, Marico's response was typically entrepreneurial and desi, so they reprioritized and focused entirely on Parachute. The business conference on this issue saw Marico employees dressed as soldiers. The project was called Operation Parachute Ki Kasam. The leadership galvanized the whole team. It was thrilling as the team realized the gravity of situation and sprang into action. Marico retaliated by relaunching Parachute with a new tagline highlighting its purity, by widening its distribution, and by launching an internal sales force initiative. Within 12 months, Parachute regained its lost share, thus limiting HUL's growth. Despite several relaunches, Nihar failed against Parachute. Finally, Marico acquired the aggressor brand Nihar. Since then, Parachute has been the undisputed leader in the coconut oil category. This leadership has ensured that when one visits the hair oil section in the retail store, about 80% of the shelves are occupied by Marico branded hair oil. In Bangladesh, it had 67% market share of coconut oil. To fuel its ambition of becoming an emerging market FMCG player, Marico made several acquisitions over financial year 07 to financial year 13. These acquisitions raised the share of international sales as a percentage of total sales to 22% in financial year 13 from 10% in financial year 05. In 2014, Mariwala stepped down as managing director, leaving the post to Gupta, an IIM Bangalore and IIT Kharagpur alumnus. Gupta has risen first to CEO in 2013 and then to MD in 2014. Mariwala remains on the board as non-executive chairman of Marico. Since the firm's incorporation, Marico has consistently focused on three key factors which drive a consumer staples company's growth rates: maintaining brand leadership, extending winning brands, and divesting low-margin brands. Marico entered the oats category in 2010 and innovated by focusing on flavored Saffola masala oats instead of plain oats, which was a category dominated by PepsiCo's Quaker plain oats. After work, cultural and sports competitions were organized to keep the workers occupied. This HR innovation ensured that Marico never faced disruptions at its factory. Following the success of Parachute in 1970s, an advertising agency was hired for Saffola as well as in the late 1970s. To distinguish itself from other brands, Saffola was positioned as health-oriented edible oil. In the early commercials, the advertisements played on consumers' fear by showing the visuals of a man being wheeled into the ICU as his wife looked on anxiously. The message was clear: use Saffola and protect the health of your family. Marico's share price outperformance. A rupee invested in Marico at its IPO in May 1996 is worth rupees 117 in April 2016, implying a compounded annual return of 27%. That same rupee would be worth just rupees 7 if invested in Sensex, implying a CAGR of 10%. Thus, Marico has outperformed the Sensex by over 17.8 times over the past 20 years. I hope you liked this video. Link of the book The Unusual Billionaires is mentioned in the description. Next video will be on HDFC Bank and how a vision of leader achieved success. For more informative videos, please subscribe to this channel, like, comment and share. Thank you.